Hello, Shakti and everyone. And today is another day about portfolios, how to build the portfolio. Well, I think that there is not like an exact science currently. We had just a recent conversation with Shakti regarding one of the portfolios which has been built by one of our users. So Shakti was really impressed by that. Please, everyone, like, share, and subscribe. Also, if you actually want us to look at your portfolio, then please share it, make it public, build it on our platform. It would be very interesting. Okay, so there is that saved portfolios. One interesting one was that this current portfolio September onwards by Stella. That's the one, right? Right now we see that there are 21 stocks and it is calculating on the fly dividend yield, which is going to be 1.2 for these portfolios with all the
Yeah, that is
stocks.
just close to the market yield. So nothing special there. But the thing is, the stocks being picked, or the ETFs also that were picked. If you scroll down to the list of ETFs and stocks, we have the names along with them. So you have, if you look at the allocation, 20% is allocated to short-term treasury bonds. So technically, short-term treasury bonds are my go-to bonds when it comes to bonds. People get confused that bonds will always be a safe haven, but it is not true. It depends on what kind of bond you're trying to hold. If you're holding a
Yeah.
long-term bond, it is subject to all kind of fluctuation based on changes in interest rate. But if you're holding a very short-term bond like this one, interest rate fluctuations are limited, and your money is technically safe compared to other bonds, right? And then the interest rate that you get is the current market rate provided by the government. So at this point, I think the interest rate is close to 3.5% or something like that. And if you
Mhm.
hold this bond, you'll get that return. So if 20% of that is in bonds, you reduce the volatility in your portfolio. And then this is a good time to invest in bonds because the yield is pretty high. And then you have gold. Gold is 33%, which again is a hedge against market volatility. These days, we know there are a lot of negative news in the macroeconomic situation. So I don't look at macroeconomic situation. We had done some analysis in the past to see how much gold should be in your portfolio to reduce the drawdown of any portfolio. And over the last multiple decades, we have observed that when there is uh, a negative news in the market, like the 2008 or 9 financial crisis and the 2000 dot-com bubble, and even recently after the tariff,
Yeah.
gold seems to go up while stocks trend downwards. And then somehow, mathematically, even though the total returns is similar to what you would have received if you just held stocks, it's pretty close to this 33% allocation of gold. So it's a balancing act. It doesn't mean gold is a good investment by itself. If you put all your money in gold, you're going to get the worst returns possible compared to the market, the stock market. So you should have a proportion of gold which will not mess up your overall returns. And then silver, I am not a big fan, but still recently it has done pretty well. So it makes sense to be in that portfolio. And then I saw, yeah, go on. Any questions?
Oh, why you are not a big fan of silver?
Well, it's not as rare as gold itself. I know it's a commodity people use, but gold is supposed to be a store of value um, for millennia, right? So for several thousands of years, people have been using gold as a store of value because of its rarity, right? But silver doesn't have the same rare, it's not that rare as gold, and that's one reason why I don't have the same affinity towards silver as I would if I held gold. And then I saw multiple ETFs which were Asia specific. Even I don't recommend. I mean, my opinion is that there's no need to invest beyond the US, but in some cases, it makes sense because there are some companies in Asia that are growing pretty fast, and being able to capture some of those might help the portfolio. Even let's say TSMC, which is the semiconductor leader, right? They are
Yeah.
located in Taiwan, and if you don't have that in your portfolio, you're missing out on that growth, right? So it makes sense in these days because other countries are also coming up with good companies and good revenue and growth. And then you have Japan hedged equity, and I also see European equity, and then a bunch of US stocks handpicked. Some of them are really good names. I also hold some of them. So overall, this portfolio looked like it was built by someone who has good knowledge about the overall stock market, not just the US market, but also globally, including commodities, right? And the result is obvious. I know they mentioned it's September onwards, but our app, when you create a portfolio and if you don't mention the date, it will pick the date on which it was created. So I can only see from February when it was actually created. That is Feb
18th.
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 Yeah.
Yeah.
So it's been almost a month, and it has done better than the market. And I believe in the future also this could do well when compared to the S&P 500, which is the US market. Because the US market currently has a lot of overvalued companies. Since the valuation is too high, it's possible that the market will either be flat or go down. Or it might be turbulent for a few months or years even. So it's a good
Yeah.
portfolio to track and see how it goes.
Yeah, that's great. And you can see here from the day it was created how it was performing. So unfortunately we have only 1 month of data in here. Would be good to have little
Even
bit
though-
more
We'll,
data.
we'll keep coming back to, yeah, and see how it goes.
Yeah, yeah, and then we can compare it with market S&P 500
Yeah.
volatility. That's quite interesting exercise overall.
Yeah. So we don't look at it as a investment advice or anything like that. We are trying to build a community of investors who are willing to share their knowledge, like it was done here. A
Yeah,
community of investors who can make data-driven decisions rather than react to the noise in the market.
yeah. Well done, Distello. Uh, well done. If anyone wants to share their portfolios, please very welcome. That's fascinating. Thank you.